I will be explaining like what is trading range. Okay, external range and internal range liquidity. So if you have any question, just ask me. After I will tell you to ask. Like, don't interrupt in between. So please. So yeah, I will explain in two things. We have trading range and external and internal range liquidity. Just write it down over here. So if you see, price is making higher high, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. So this is your higher high, and this will be your higher low. Then again the higher high, the higher low, then again the higher high, then again we have this as a higher low. Okay, and this was instance.
Dân Hà Nội đi đâu cũng thấy chụp hóa đơn đâu này, kêu đắt ăn hải sản rồi đó, mày ăn đúng tay.
Yeah, so you see price is making higher high, higher low, higher high, higher low, then again higher high, and this will be your higher low. So we have a break in market structure here towards the upside, and again we have another break in market structure towards the upside, and another break in market structure towards upside. So we have this as an impulsive move, and this is your corrective move. Okay, impulsive, and this will be your corrective move, because we are in bullish trend. So again, this will be your impulsive move, this will be your corrective move, impulsive, corrective, impulsive, and something like here will be your corrective move, then another impulsive, then this will be your corrective move, then another impulsive move. So how I see my trading range, like I see like the distance between the higher low to higher high, and the distance which is responsible for the breaking market structure here. So like this distance, this one, the higher low to higher high, I call that as a trading range. Like from here to here we have a trading range, and after creating this trading range we have a break in market structure here. Okay, so here we have the higher low, and we have the break in market structure here, and we have this higher low form and this higher high form. Okay, so this will be our trading range from this higher low to this higher high, and again we have a break in market structure here. So we have a higher low and we have a higher high. So I see, like in bullish trend, I see the distance between the higher low to the higher high. I call that as a trading range. Okay, so this will be our trading range from here to here, then from here to here, then from here to here, then you might see from here to something like here. This will be our trading range. Okay. And now I will explain like yeah, external and internal range liquidity. Okay, so as you can see, like we are in bearish trend. Okay, this is higher low, the higher high, the impulsive move, the corrective move, the impulsive, the corrective move, the impulsive move. Okay, so something like here, you see this is the last swing high, swing low, swing high, swing low, swing high, swing low. So the last swing high external equity. The last swing high, I call that as a external range liquidity, and the last swing low, I call that as a external range liquidity as well. So the same thing here, like here, from here to here, from here to here. You see, from here to here, and from here to here. This will be the last high, the last low. I call that as a external range liquidity. And where will be our range? Our range, like we have a break-in market structure here. Let's just, for instance, like we have a break-in market structure here. So the the move which is made like in bearish trend, the move which made lower high to lower low. Okay, the impulsive move, I call that as a range, internal range. Okay, sorry, yeah, I call that as a range, trading range. Yeah, so this is a corrective move, and then another move, we have a break in market structure here. So the lower high, the lower low. This is another trading range, trading range. Okay, and the another trading range, and we have another trading range, and we have another trading range here. Okay, so the last high, the last low, I called as an external liquidity range. This is also a external liquidity range. Why I'm marking this as an external liquidity range? Like if price comes here and takes out this high, okay, so like if price takes out this high, so this will be our main BMS, like major break-in market structure. So that's where I see like the trend is changed now, and we can look for buys around some point of interest around here or here if price come back here again. Okay, so I'm not explaining this now, like I'm explaining external and internal range liquidity. So this will be our trading range, the range which is responsible for the BMS. So this range, the trading range here, from here to here, we have this trading range here from here, and this is the last high and the last low. I call that as a external range liquidity, the last high, the last low. And this the zone, like the range, this like the small move, the small move which happened around our trading range, I call that as a internal range liquidity. So this will be our internal range liquidity, lower high, lower low, lower high, lower low, lower high, lower low. This will be our internal range liquidity. Okay, this will be our internal range liquidity. This will be our internal range liquidity. So price always it's for this internal range liquidity, and from the high to low we have external range liquidity, and this is also external range liquidity. And this down move I call that as a trading range. Okay, so yeah, so another thing, same thing here, like we have internal range liquidity forming like this. Okay, so again like this we have internal range liquidity forming here. So this is how I see market, like this is, I call this as an internal range liquidity, the lower high, lower low, lower high, lower low, lower high, lower low, and the whole range from here to here I call that as a trading range, and the last high and the last low I call that as a external range liquidity. So yeah, the same thing, like you see. So let's just go on charts. So you see, like price making price, we have a break in market structure in here for the upside. Okay, and let's see this. Price is forming higher high, higher low, higher high, higher low, higher high, higher low, higher high. So this higher high, this higher low, this higher low, this higher low, this higher low, this higher high, this higher low. So you see, like this, from this to this to this to this, from here to here, from here to here. I call that as a, this is will be our external range liquidity. Okay, same thing, we will have external range liquidity. Same thing, we have external range liquidity. This is, yeah. So another, this will be our external range liquidity, and this will be our external range liquidity again. This will be our external range liquidity here. So as you see, we have a break in market structure in here. Okay, so from this down move to this move up move, we have this whole range as a, what we call a trading range. From here, this low to this high, we have this whole range as a trading range, we call. Okay, we call this as a trading range. So from here to here, we have this trading range from this low to this high. And from this low to this high, we have this trading range. Like you see, after making BMS, so we have another BMS and another trading range formed from this low to this high. So
now the big question comes in: where will be the entry?
no, I will be just explaining like this range, like you have to understand,
Range,
not
right.
talking one liquidity.
Yeah.
Yeah.
Yeah, right.
So this will be our range, like we have a BMS. We have another BMS. So this will, from this low to this high, we have a range. So yeah, so just understand this thing, like people like to people see a small break in market structure here, and they will look for sells here to catch this high. And what happened here is price didn't taken out a major structure here, and then again pull up towards the upside, like or how to explain this, like if price has broken this low, okay, from if price comes here like and broken this low, that's where we will look for sells. Otherwise we will not look for sells. Like if price broke this low only, then we will look for sells here. If price will
It
broke
should
this low,
break the higher low, right?
yeah, higher low, the external range liquidity, that's where we will look for
If it
sells. if price
If it
doesn't break
keeps-
this low, we
keeps
will look for buys only, because we are trading from this range to this
Yeah.
range. So price is only forming,
Correct.
just understand, like we have price forming like the range only, higher low to higher high, higher low to higher high, higher low
Yeah.
to higher high, and we have no
Correct.
range for down move.
Correct. So we can just catch the pullbacks on a higher low and make an
Yeah.
entry there, right?
Until unless there is
For the buy.
no BMS towards downside, and there should be always like external range liquidity to be taken out if we be looking for sells only.
So
Otherwise, price is
let's
only
suppose
moving in the range.
let's-
Like
Animesh, let's suppose someone wants to buy, right? For someone wants to buy, they have to see the price should have higher low, right? I mean,
Yeah.
it should not have a lower low. It should always have a higher low. So higher low is our entry point, but how do we find out this will be the higher low? Like market has not given us the higher low yet. How do we see that?
what I'm explaining here is like, see,
Is the range? I understand you are explaining the range. We only take the entry on break of market structure.
no, not that.
Okay.
Like, this is how I'm explaining. Like we are in bullish trend here. Okay, price is made
Correct.
this higher high, this higher low, this higher high, this higher low. So price is only making the impulsive move, and this is corrective move, impulsive corrective move. So this is our external range liquidity, the last high and the last low. And after the BMS, the another range formed. Like from this low to this high, we have a range here. From this low to this
Correct.
high, we have a range here. From this low to this high, we have a range here. So for looking for sells, like if I will be like, for instance, like this is the last time.
We either
And
wait for supply or double top or something like that. I mean,
Yeah.
in SMC, there's different thing.
No, I'm not talking about entry right now. Like I'm just explaining the range.
Okay. Sure.
Yeah. So if I will be looking for sells, or you should look for sells only after taking out the major range. Like from this low to this high, we have a range after creating this BMS. Okay. So if you are looking
Correct.
for sells, so you always look for a range to be taken out first, then you should look for sells. Okay.
Correct.
If something like
should
this
break
didn't
the previous
happen,
low.
yeah,
Previous low at least.
yeah, if price didn't break this low, so only look for buys from this
Yeah.
premium or discount
Correct.
zones. Discount zones.
Correct.
Okay. So yeah, so that's what I'm explaining. Like don't, like if always mark like your range, the low, the high, the low, the high.
Yeah, this is the best way to
the
get
low.
the clarity that we are not taking any wrong move,
Yeah,
I mean not going against the trend.
exactly. So that's
So
how
if
I
you look
explain.
at odd USD on a higher
Just,
time frame, let's
wait, just see things like what I'm
sure.
So we have another BMS towards the upside. So we have another trading
Correct.
range, this high to this low. We have this as a external range liquidity, the high, the low, and this is another high. So the another trading range formed here, from this down move to this up move. Okay.
Yes.
And this is another, and after breaking this high, we have another trading range formed from this high to this low. Okay, where the trading range is, this will be our trading range, the high to low. Okay, and price is taken out another high. So we have this as the external range liquidity. So this will be our trading range from this low to this high. Okay, so now you see like this is the last trading range, and after taking out this trading range, like from this low to this high, we have a break in market structure. Like price is taken out the lows again. So after taking out this low, price is never taken out the highs. So we are in bearish trend now. So like what formed here? Like this is the swing high to swing low again. So we have a trading range towards the downside now. Like this will be our trading range from here to here. So what same thing here to here to here to here. So this will be our trading range here. This will be our trading range here. So why I'm explaining this as a trading range? Like if you are trading in this range, like from this low to this high, so we will looking for buys. So what I'm explaining here is like if you are looking for the buys here, like from we are in bullish trend, so always look for the buys around a discount area from a trading range. Like we are in bullish trend, price is making higher high, higher lows, higher highs, higher lows. So always look for discount area from trading range. Like always trade around 50 anything which is less than which is below the 50% of the trading range. Like you see, we have this trading range here from this side to this side. To always look for price to come at a discount level if you are looking for buys. So what happened here is price came just below 50% of the discount this trading range, like from this side to this side, this and bought up, and same thing here. We mark this as a trading range, like this high to this side, and where price has bought like just below 50% of this level, like this OB is just below 50%. Like always buy at a discount level. And
so practically it is, bro, like 0.786. I mean, the price retraced
not about
78%, right?
Like I see like anything which is just below 0.5%,
yeah.
50%. Like a price didn't given us any kind of didn't come here like just below 50%, but this spot here, but we won't look for sales buys here.
Correct.
Okay, only buy at a discount level
buys,
and
yeah.
within a trading range.
One more.
Yeah.
Okay. Good. I see one more thing in this chart. On your right side at 0.6900, right, where you have marked the external liquidity, 0.6900.
Here.
Price at 0.6900. You have marked the liquidity range on the right hand side. Go on the top. Right. No. 0.6900. Down. No. Check the price 0.6900. Price at 0.6900. Yeah, this one, right one. So here the range changes, right?
Yeah, range changes.
Yeah,
that's why
this
I'm
one
saying like this is the from this high to this high low, we have a downward trading range after taking out this low.
Yes.
Understand?
So we look for a retracement to the same block, 15 block, right?
Yeah, just below anything which is in premium range. Like
not really.
If you are looking for sales, just look for premium range for any move. So why am I explaining
this? Like this liquidity it wants to take out. Yeah.
Why I'm explaining this like is just because if we are in bullish trend and price is forming the trading range from higher high to higher low, higher high to higher low. So always look for buys if price didn't taken out the lows and just below 50% of the discount level. Like here, price didn't taken out the lows here. So we won't look for sells. We always look for buys just below the discount level of a trading range from this high to this low. And you see here price is taken out the lows. And after taking out the lows, our bias will be changed. Like we will look for sells here only. Okay. So here to here. And if price takes out, for instance, like if price takes out this side, okay. So our bias will be changed. Like price takes out this low higher to this side. So we will look for buys only. Understand?
Correct.
Yeah. So always look for like if price making higher high to higher low, higher high to higher low. So don't look for sells here. Like don't look for sells here. Always look for buys at discount level. If only price takes out this low, that's where you will look for sells. Otherwise, no. Like if price takes out this low, then only look for sells from here. Otherwise, we will not look for sells. Always wait
Like
for price
on a
to take out the range first and create a BMS
sure.
towards the upside or downside. That's where you will look for buys or sells, and always look for buys at a discount level of a trading range, and always look for sells around a premium level of a trading range. So that's how trading range works. So like I was doing something like on GPGPY. You see, like you see what happened exactly here is prices from high to low. Okay, that another high to another low. So what happened here is this is our trading range from this high to this low, and from this low, from this high to this low, another trading range formed. Okay, so always look for buys around the trading range like this. If this low has taken out, for instance, okay, so that's only where we will look for sells. Like if this low, this low has been taken out, for instance, so that's only where we will look for sells. Otherwise, we will not look for sells if you are looking for swing trade or anything. Understand?
Yeah.
Yeah.
Got it, bro.
If
Yeah,
this,
I have a question, bro.
yeah, see,
Uh, um, if I in the trading, what time frame uh, to uh, to find external range? I
4
mean,
hour, 4 hour,
what time frame
4
to
hour,
find external range?
4 hour,
If
4 hour.
I 4 hour.
Yeah. Yeah, so that's how I understand. Like if this high has been taken out, like if this high has been taken out, so like if this high has been taken out, okay, so we will have this whole area, this whole from this low to this high, we will have a trading range from this low to this high. This whole move will be our trading range, and we will always look for buys at a discount level. Okay.
At least at 50%, right?
Anything just below 50%.
Okay.
Yeah. And for instance, if price has taken out, for instance, if price is taken out, like this is our higher high to higher low, and if price taken out this low, this trading range, like from this, if this trading range has been taken out, like this high to this low, okay, so this will, we will look for sells from this premium level, then here. So
at least more than 50%.
Yeah. So where will be our trading range? This will be our trading range from this high to this low. So we will have another BMS here.
Like,
wait. And
yeah,
we have another
sure.
BMS here. So we will look for sells again. Anything below 50%, like if we spark this as 50%, and we will look for sells again. So this will be our another trading range. You see, like always look for sells around trading range, like from this height to this low. Okay. So, so this will be our trading range here, and where price reversed like just above 50% of the trading range. And where is our trading range? This is the high, the low. Okay, and we have another PMS towards the downside. And after creating this PMS, like for instance, this is our loss flow. So we will mark the 50% of this whole range, and this is our last high, the last low. So we will always look for cells just above the 50%. Okay, of a trading range, and we have another BMS towards the downside, and same thing again. So we have.
So we can just
range.
find a mitigation level above 50% or
Yeah.
below 50% in case
Yeah.
in case of bullish scenario below 50, in case of bearish above 50%.
Yeah, supply or demand zone. That's it.
Correct. One question I have.
One second.
Like we were trading.
Yeah, say.
Sure.
Say. Ask.
Go ahead.
Yeah, no.
So I was asking one question on last week we were trading USD CAD, right?
Yeah.
So the pair is bullish on a 4-hour time frame. It is creating a range